So I'd like to talk today about how traders evolve and how they learn and grow. And sometimes it is a journey, and sometimes it's a lengthy journey before a trader can become consistent and successful. So yesterday on our weekly webinar, The Options Tribe, we had a guest, Matt Williamson, who has his own website and his own educational content. And Matt gave a quick bio of his personal trading journey. And I thought it was very interesting, and I wanted to share with you my reactions to his 7-year trading journey. I thought it was a really good example of how traders evolve. So Matt talked about 7 years ago how he jumped into trading in the first place, and that was through newsletters. And a typical newsletter gives you recommendations for stocks to buy or trades to take, and then you follow those newsletters. Usually they come in an email format, and you pick up your email every day, and basically what you're doing is trying to get somebody else to make the decisions for you. And newsletters therefore are of limited usefulness, because if someone else is making the decisions, you're not learning at all, you're not growing, you're just following, copying essentially. And so therefore it rarely works. It rarely works because when a trader tries to do someone else's trade, he doesn't necessarily have a feel for why that trade works or doesn't work, and when to bail out of it, when to not try to get in it. And in many cases, the newsletters will be distributed in such a way that by the time you try to get into the trade, the opportunity is already gone, but because you don't really have trading experience, you're just copying someone else's experience, you don't really understand that it's too late to make the trade. So very, very few people succeed with newsletters, and this trader lost money doing that and was very, very frustrated by the end of that experience. Matt then talked about his phase 2. And his phase 2 was value stock investing, and he decided to become basically a value investor and lost money doing that. And that's not an uncommon experience. Most people who try to become value investors as sort of amateurs don't succeed, because first of all, these things take a lot of training and a lot of apprenticeship under outstanding investors, and also because you're basically trying to beat the pros at their own game, and you're not likely to do that from the comfort of your own home. So phase 2 was also a failure. He lost money in the newsletter phase, he lost money in the value investing phase, and then he found options, and he began to get involved in what's called high gamma, which those of you who don't trade options, you just might think of this as riskier options trades, usually close to the money, at the money. And he was doing trades called diagonals and iron condors, and finding himself very uncomfortable psychologically because of the risk involved, and also lost money. And so that phase was also a failure. So far we've got 3 for 3 failures. Now we move on to phase 4, and this is where, having been introduced to options, Matt starts doing a particular structure called a diagonal, and with diagonal options structures, he began to trade equity options, or the options on equities, through the use of the diagonal structure, and started to make money. He wasn't really comfortable yet psychologically. He was a little more comfortable, but he wasn't as comfortable as he wanted to be, and he didn't make as much as he wanted to. And then about 3 years ago or so, Matt found his niche, and that is butterflies and condors in index options. And what Matt found was that a style which is a low gamma options trading style is a style that met his needs psychologically, and that tells me that he's more on the risk-averse side, which is fine, so am I, and therefore he began to experience success. He started making good money, he was comfortable psychologically, and he was not bored. He was interested in the whole process. And so I think it's important for you to understand why I am emphasizing this today. And that is that every trader goes through a period of trial and error in trading. It's very unusual for a person to just jump into trading and be successful right away and just keep getting better and better and better. Usually there's a trial and error period, which means error, which means failures. For some people, it takes years for them to get through this trial and error period. In Matt's case, it took 4 years. For myself, it was actually just about the same amount of time, about 4 years or so before I started to become consistent and I started to get comfortable psychologically. I had periods, as did Matt, where he thought about quitting. I certainly had periods of doubt, especially in those early years where there was failure after failure and you start wondering whether it's possible to make money trading. But most importantly, the reason I am pointing this out today is because if you think about Matt's progression, it went from extremely uncomfortable psychologically to psychologically comfortable. And it is no accident that when he became psychologically comfortable is when he started making the most money. So what's the lesson here? The lesson here is you're going to have to go through a period of trial and error. You're going to become fascinated with a certain strategy, and then its ugly side rears its head one day and you get scared away and you run to another strategy. All of you who are experienced traders have gone through this, and all of you know what I'm talking about. However, you will not be successful long-term unless you've gotten comfortable psychologically with what you're doing. Now, what you're doing may change over time, but you will not be successful at any venture in trading unless you've become psychologically comfortable. So trading is a journey. You're going to have a lot of failure in the beginning, but if you're persistent and you work hard to broaden your horizons, experiment with different trading styles, trading types, trading vehicles, you will find that which will be successful for you, but it may take a little while for you to find what works for you psychologically. If a trading style is not consistent with your psychology, you're not going to be successful, you're going to lose money. If you find something that makes you comfortable, and that may be very different for different people, then you have a really good chance of succeeding. Some people are like risk. They get bored and inattentive and unsuccessful, and they chop themselves out of trades when they're bored and the trades don't have much risk. Some people just absolutely love risk and they thrive and grow in that environment. Others are more risk averse and they do not thrive in the highly risky environments like Matt just mentioned. In those cases, he's got to find a trading style that has a risk component to it that's consistent with his psychological makeup as a person. So please don't give up trading. If you are interested in trading, if you love trading, if you have a passion for it like I do and like many of us do, you just have to find your niche. You have to find that which is comfortable for you psychologically. And if you do that, and only when you do that, can you start to become consistently profitable.